Welcome to the AACFB's 2022 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host. Our presenter today is Alex Erickson with Navitas Credit Corp. Navitas is both a funding source member and a silver sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce Alex, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. Please use the chat for just information between attendees. The entire webinar should take no more than about 30 to 45 minutes. For those of you who'd like to review this webinar at a later date, it will be posted on the 2022 Meet the Funder page on the website and will be emailed out to the AACFB membership. At this time, I'd like to turn it over to Alex. Alex, it is all yours.
Thank you very much, Monica. First, let me say thank you to the AACFB for allowing Navitas to present. And thanks everyone for joining us. We're very excited to present and hope we might be able to represent the value as a funding source to many of you listening today. Let's go ahead and get started. Who is Navitas Partner Funding? We are the partner funding division of Navitas Credit Corp, and we've been a part of Navitas since 2011. We're a nationally bank-owned funding source that mostly handles small to medium-sized companies and a proud longtime member of the AACFB. Our parent company is United Community Bank, a $20 billion bank based in Georgia. What this means is Navitas offers our broker partners the stability and dependability they need in both good times and bad. On that note, I should point out that at no point during the pandemic or any time did Navitas ever cut off funding or suspend partnerships or anything like that. We've been here since the beginning and plan to be stable and here for the long future. One of the things that makes Navitas unique is that we actually have two broker divisions that make up the whole entire team. One is asset-based lending, and the other one is focused on credit-based lending. The asset-based, and to give you a quick summary of them, is they're an A and B quality lender that factors both credit and asset into their analysis. By taking valuation of the collateral into perspective, it gives this group flexibility to structure the deal that best fits the customer. Stronger the credit and asset is, the more competitive the asset team can get. I think the best way to do it is kind of give you an example. So let's think about an excavator deal, a nice hard asset. The asset team would analyze the asset and compare it to two different valuations, the retail value and the liquidation value. If we know that the unit is worth 50K and we know that it will the liquidation value is 30, and the customer is buying the unit for 45 grand, we know that we're getting a good price right off the bat of the unit. And we have a little bit lower risk because we know that you're looking at roughly a $15,000 risk assessment. Because of that understanding, it allows us to take a deeper look at the credit and gives us the flexibility to change or take a credit that normally would be labeled more as like a B credit and give it more of an A pricing because of that asset valuation. Although they're not restricted to just hard asset, we mainly do specialize in titled equipment, industrial, car wash, screen printing, sporting equipment, and construction equipment, while they're open to a wide variety of industries, including both the long-haul trucking area and oil and gas. Our credit-based team focus purely on the credit quality of the transaction and with a real deeper focus into the A and B type of credits. They are generous by nature and consider the wide variety of collateral types and industry types, from medical to restaurants to office furniture, even 100% software equipment, software transactions. Excuse me. We focus on things like time in business, personal credit, comp borrowing history, and so forth. For the credit-based team, it really is all about the credit. At the end of the day, though, I would say if you need to know anything about both groups, is this statement. We want to elevate the transaction mentality into a long-term partnership by pledging to excel service and products that promote shared growth. We truly believe deeply in the broker relationship and cherish that relationship. So let's take a look at some various programs and services that we do. As we stated earlier, is that we're kind of the A to the C plus credit quality funder. One of the nice things is that we don't auto score any of our transactions, and we have a long list of experienced analysts that try to make good, sound, common sense decisions. By that means that we're not scorecard operated, nothing like that. We just look at the deals for the whole entirety and say, hey, is this a deal for Navitas? Our broker population consists of everything from small one-man armies to strictly larger, big brokering deals or large lessors that discount portfolios to us, and everything in between. We're widely considered to be amongst the most responsive in the funding marketplace and offer the fastest turnaround times. And when I mean fastest turnaround times, we kind of iterate on the slide, and it does typically take us about 2 hours to turn a credit decision, as well as 24 hours if you're looking at, say, transactions 500,000 and above. And then for funding, we usually are running within 4 hours. So even, it's safe to say that, especially on like non-titled transactions where a POA is not required, we can take a loan that got submitted in at 8 o'clock. And by the time our funding closes at, we can theoretically fund that deal the same day. A little bit more about us, we're app only up to $250,000. And then we require a full financial disclosure to programs all the way up to $3 million. Really, what is our sweet spot for both groups is about 500K, because we're able to decision those deals in-house without having to go through upper management of Navitas or the senior credit committee. But we do, like I stated before, we do have the capabilities of going up that high. It's just that we have to, we have the more flexibility up to the 500,000. Your startup customers may have a home for us if it's up to 50K, and if they have good credit and a prior industry experience, as well as we can do various types of equipment, including title as well. Another approach we take beyond our standard guidelines is that we offer the ability to tailor programs specifically to your needs and the needs of your customers and vendors. So think along the lines of specialized documentation, advanced payment, structured, seasonal payment, annual payments, everything in between, and just your general underwriting. What we take a lot of pride in is being flexible on the structure. And if something else is we can offer on a deal by deal basis, whether it's zero down, deferred, seasonal payments, all different residuals type of thing, we're very accommodating and try to do what's best for you and your customer. I mentioned earlier that most of the business with our brokers fund through us is small to medium businesses, but we definitely do share a corp-only transaction without personal guarantees for well-established companies that have a prior borrower history on a corp-only basis. We are pretty flexible when it comes to pre-qualifying vendors with prior to equipment delivery. It really kind of just makes sense for what the type of equipment it is, as well as how it's handled. The main thing that we take that we want to put out there is we do not charge interim rents. We might be one of the few funding sources that have that go that way. We understand that it provides some flexibility to other people. The way that we focus on it is we're charging interest expense to and they're making payments for X amount of time. And then when that happens at the end of the day is, say the customer made $6,000 worth of interim rent payments, they ask for a payoff once the contract starts, and they're saying, hey, where'd the $6 grand go? We don't like having those type of arguments. We firmly believe in just letting the customer build equity into the unit. Again, not saying that interim rent is necessarily wrong, it's just not a fit for us, and we don't like having that customer come back and say, hey, where'd my money go? Another thing that Navitas is really proud of is that we have an industry-leading broker portal that gives you more than just your standard app submissions, doc generations, and DocuSign. One of the great things about it is, it's quick and easy to access. You'll be able to theoretically docs your deals at any point of days. Docs can be generated just to a PDF for email distribution and a wet signature if you want, or it could be done through electronic signature as well. The site allows you to manage your status between the envelopes, so you at all times who has signed, who hasn't signed, where you're at, or if you need to do something like correcting email addresses or voiding out certain contracts because there is a mishap or miscommunication that you need to change. We also offer a program that allows you to submit the doc request and have us prepare the documents free of charge. So it really works whichever way it best works for the customers. I know we have a group of brokers that don't necessarily, kind of like the one-man armies, don't necessarily have a whole lot of time and capabilities to be able to sit there and do their own docs. So that's why we do it. And there's other brokers that are very capable of handling that and prefer to have that type of control on their side. And so either way is available to either group. You just simply have to ask which way you prefer. Another form that we take a lot of pride in is our electronic acceptance and activation. It's a very fancy way of saying that we don't need to do verbals anymore. You can just simply have the customer sign this documentation via DocuSign, and it takes place of the verbal. Another thing that we've been asked multiple times before in the past is, you have a customer, you have a portfolio with Navitas, and you call up Navitas and say, hey, who's been paying you well, and how do I get access to that group of people so I can call them back and try to get them as a new customer? The portal has this tool called the Good Customer Report, which allows you to market the good paying customers for pre-qualified amounts, and as well as preview a transaction with our credit team, or check equipment industry or something that we consider. All of these functions are available right to you. Click a button. It gives you, like I said, it gives you access to repeat customers, which is huge in this industry because everyone's going for that end user, repeat, bring them back type of customers, as well as you always have general questions on, hey, is this deal a fit, or can I do this industry? Can I do that? All that is available to you at a click of a button. So besides the portal, we also take advantage of this additional technologies that help our business partners grow their business. We offer vendor tools designed at capturing customer leads online, an online credit application, finance resource center, and those finance as well buttons for your vendors' websites are all aimed at prompting potential customers to apply financing as early and often in buying the processes as possible. Most importantly, as I kind of stated before, and I want to reiterate this again, we are very much a relationship-oriented company. In fact, you don't ever have to go through any sales rep or liaison or anything like that if you choose not to. You can always work direct with our credit and funding teams or documentation teams at any point during your process. We want to get to know you and your business and work together to grow our shared business in the long run. As an economic downturn looms in the horizon, we are a funding source that does business the right way, and we're looking for partners to work with that do the exact same. We're actively considering new broker relationships with established companies or where they have been sufficient prior experience working in the industry. If you believe you have interest in working with Navitas or would like more information, please email us at the email that I provided in the PowerPoint, partnerfunding@navitascredit.com, or call us at 800-516-0761. With that being said, that's the end of my presentation. It's kind of short and sweet, and I'd like to open things up for any questions that anyone might have.
So just as a reminder, if anyone have any questions, please put those in the Q&A box and we'll get those answered for you. It looks like there's a couple in the chat. It says minimum amount of monthly, quarterly, annual volume. Do you have a minimum?
So actually, no, Navitas has no minimum quarterly annual volume. as a relationship driven, there's different brokers and different types of scenarios. Like I stated, some are one-man armies that can only send you X amount of deals over a certain period of time, versus other broker shops that are fairly large and they can give you that consistent application flow and volume flow. Neither one of them necessarily, we accept both different kinds. And at the end of the day, I would say that the answer is no. And we really focus more on getting to know you as the broker better and focus on getting the deals that you submit approved and funded over the quantity of deals.
Okay. Brandon wants to know if you have a rate sheet they can review.
We depending on which group you are a part of, there is a rate sheet over on the credit side, because the asset side is a little bit more unique in the sense that they're applying both the collateral aspect as well as the credit side. They don't necessarily offer you a rate sheet. They kind of look at it more as a deal by deal basis. I would say that rates are still fairly competitive. Obviously with the rising rate environment, there's always subject to change. But I'd say right now we're pretty strong in terms of that mid to high single digit buy rate kind of right now.
Okay. Tom wants to know if vendor and pre-funding approved when submitting a file.
Yes, that will always be considered at that time. When you're submitting a deal, it doesn't necessarily mean that you have to have a vendor when you submit it in. We obviously prefer to have it in if we can, just because it makes our process simpler and makes it turn around that much quicker. But if you have something where the guy's choosing between three different excavators, for example, the guy, you can email us and say, hey, they haven't picked out which one it is. It looks like it's going to be around 60 grand or whatever it is. And the excavator is going to be between 2012 to 2018. Can you please look at it? We're more than happy to do that as well.
Great. Regarding titled equipment, will you consider over-the-road trucks, or are there any specific requirements for trucking deals to qualify?
So for over-the-road trucking, in terms of the credit side, unfortunately, they are not doing any sort of over the long haul trucking. For the asset side, yes, they do. There are, I believe, the standard requirements are about 5 years time of business, home ownership, and I believe it's 700 FICOs or better.
Okay. What is your policy on dual submissions?
There's two different styles that we're doing it. The credit side will allow dual submissions. How they will do it will be if broker A submits the deal and it was approved, then broker B submits the deal, then they'll turn around and they'll acknowledge both sides and say, hey, just FYI, this is now a dual submission that offer the same terms, and the first person that brings back original docs wins the deal. The asset side does not allow dual submissions. I know they've had before problems in the past where they've run into those issues before of whose deal belongs to who, and so they just decide to avoid it all entirely.
Right. What are the requirements for startup businesses?
I think it's pretty much your standards, your industry standards. We're looking for 700 FICOs or above. We like to have a written write-up on all submissions to kind of prescribe what they've done beforehand, showing proof, not proof, but just an explanation of what they've done in the industry beforehand. I think that's generally about it for the startup.
Okay. Is there a fleet requirement?
There is no fleet requirement for our trucking businesses. I will tell you that typically we avoid the one trucker going on to two truckers, to two trucks, just because that's such a complicated scenario. But as long as they have at least two trucks or more, or moving on to your third, we can have that. We're okay with that. And then for the owner operators, the one-man army type of people, they're really looking more for a replacement over expansion.
Okay. Do you offer electronic notarization POAs on titled transactions?
At this time, no, we're still doing the wet ink in terms of the POAs. We are working with Navitas as well as our parent company, UCBI, on getting that capabilities. I think there's a couple of hiccups in terms of eDocs and the way that they present it, but we are working towards it. Just at this time, we are not.
Do you have a white label vendor program for brokers?
I guess I'm not following in terms of what white label means. So if you wouldn't mind giving me a little bit more details on what you mean by white label, I'd be more than happy to answer that question.
Okay, we'll come back to that if he types in more information. Will you refinance a business truck used for local haul by paying off another lender so client can lower the 12.5% interest rate?
At this time, in terms of pure cash out or refinancing because they want to get a lower interest rate, at this time, we're not really offering it. We were offering it for a little while there, but because of the rising rate environment, as well as the potential recession coming around the corner, we're kind of trying to avoid those type of deals at this moment.
Okay. What is the maximum amount of points you allow for brokers?
It's a sliding scale, varies depending on the deal size. I believe the highest that we can offer is 15 points. And I believe that's up to, I think it's up to 50K roughly. And then it slides down compared to what you do, the larger your deal gets. Also note too, that one of the things that both divisions take a lot of pride in is that, say you get, X rate, and the customer, you need to do something a little better because the customer needs, you're in competition with someone else, or the customer was looking for a lesser rate, you're more than welcome to come back to us and say, hey, we need a lower rate and we're willing to cap our points to do that. We're always willing to work with you guys. I'm a big sports fan, so I like to make baseball analogies all the time. The way I see it is that if you come to us saying, hey, we can't get the rate that you want, and I can't make the points I want. So if I go for a single, and you get, can you give me a single in terms of rate, in terms of lower interest rate? Then the answer is always yes. We'll always work with you. Versus, don't come to us and ask, for your absolute bottom rate, and then you want to make 15 points on the top, which would be, a single and a home run.
Great. Can you get businesses that have been registered with the Secretary of State under a year approved?
Yes, it all depends on whether or not they can show proof of time of business will be the main factor there. There's a lot of businesses that were originally a sole prop, and it's a little hard to document or find proof outside of a Schedule C. But if you can get us proof that they've been in business for a long, that been doing business for a longer time outside of their Secretary of State, then yes. If you can't get us any sort of proof of that, then we would label it as a startup.
If we recruit a vendor who wants to offer financing and make it seem like it's on their own paper, can you do that?
Yes. Yep, we are more than happy that's more of the discounting model where you can put either the broker or potentially the vendor on the documentation. We don't necessarily have a problem with that as long as at the end of the day it's assigned over to Navitas. And I guess I should say you should be approved with us to handle discounting.
Do you offer a master lease or a lease line of credit?
At this point in time, we are not really offering any sort of master lease. Oh, no, actually, I take that back. We don't get a whole lot of them that often, but I believe we do have master lease programs available for non-titled equipment. It's just not something that we typically get or use as often.
Great. I'm not seeing any other questions. But we kind of rapid fired right
Yeah,
there.
no, that's fine. To be honest, I'm better at answering questions than I am giving presentations. So by all means, anyone can ask any questions away, and I'd be more than happy to answer them.
Here's one more. What are the requirements to be approved as a discounter?
I believe it's just simply you have to fill out our discounting agreement form. That's different from our normal master lease agreement, broker agreement. And I believe if you want to be booking deals on your own or paying the vendors yourself, you would need to provide financials as well.
Great. Not seeing any other questions, but obviously I'm sure you would love to have people contact you directly if they have any questions offline. And I'm just looking to make sure we didn't miss anybody. So that was a great presentation. Lots of questions, lots of answers. So great job.
Thank you. Only thing I'd like to wrap up and say is that, we really appreciate all of you guys. We appreciate the AACFB. We appreciate every single broker that's a part in listening today. You guys are really what makes our business thrive. And we want to do whatever we can to continue to establish long-term relationships with each and every one of you. So whether you're working with the partner funding asset side or the partner funding credit side, please reach out to your local person and try to create that relationship with you. I promise you that you won't regret it.
Right. With that, I want to say a big thanks to all the participants and especially our valued funding source member and silver sponsor, Navitas Credit Corp. Thank you for a great job, Alex. And we invite everyone to meet with Navitas in person at our Commercial Financing Expo coming up this September in Las Vegas. And thanks again for joining us. Have a great day.
Thanks, everyone.